Oracle stock is up over 50% in just the last 2 months. Is that momentum going to continue? Let's do a quick analysis. So Oracle, the database software and cloud computing service giant, had its stock recently jump after earnings. The headlines focused on AI data centers and the Stargate project. So does this mean momentum is going to continue, or can the growth rate not keep up with these hyped expectations? Let's start off by going to ValueGlance.com to do a quick analysis. So here we are at the dashboard. Let's go over to the stocks page and input Oracle. So here we're taking a look at the ROIC in blue and the cost of capital in orange. Remember, a high quality business maintains a high ROIC, high return on capital compared to that cost of capital over the long run. That's our sign that the business is creating long-term value. And so what we see here is that Oracle is maintaining that ROIC above WACC, certainly over the past few years. About 14% compared to 7%, not the highest spread between those two that we've seen, but nonetheless, it is creating value. But what about growth? So let's scroll down here and let's look at revenue and invested capital. And so what we notice, even going back a few decades here, is that revenue, shown in green, has been relatively flat. The growth has not been running away. Maybe it's picking up in the last few years. And invested capital, likewise, has been relatively flat, showing weak growth over the last few years. Okay, but what about the value? So if we go and click on value, we can look at the hype factor here in green compared to the equilibrium hype in pink. And so if we were to zoom out, we can see here, going all the way back to the tech bubble, the hype was in the stratosphere, and Oracle took quite some time to recover from that tech bubble crash. But nonetheless, over the past few years, we're actually seeing this hype factor jump above the hype equilibrium. Now, it's not a huge jump compared to the past, but we may ask about what sort of valuations are appropriate here. So let's go down and look at free cash flow yield. And so what we notice is the free cash flow yield, the amount of cash we're getting out compared to the share price that we're putting in, has actually been dropping for the past few years and has even gone negative recently. Now, a low free cash flow yield is not necessarily a bad thing. It means, or it could mean, that the company is investing capital expenses and trying to grow the business. And indeed, we know that Oracle is investing heavily in an AI future. However, we haven't seen that all of this cash investment has created value in terms of growing invested capital and increasing the ROIC. So while the free cash flow yield is not favorable, we should ask ourselves if those investments are going to pay off anytime soon. So what do you think? Is now the time to buy Oracle?